Our picks to click for week 34, 2025. We've got four big currency pairs that are jumping off the charts at us this week. We've got the Euro USD, we've got the Kiwi, we've got the Great Britain Pound Aussie, and then we close with the CAD Yen. So let's go ahead and look at these. A little bit different time frames. We're going to give you some support and resistance levels and maybe some interesting strategies to take a look at as the week progresses. Okay, the first market we're going to look at here is the Euro USD. Couple big market drivers facing this pair. You've got EU CPI. That's going to be a big one for this pair, and also Wednesday's FOMC minutes, probably going to be the primary market driver for the US dollar this week. Daily chart, basic trend line analysis. We did this on Monday's live stream, but I really like this analytics. I think that it could maybe bear some fruit later in the week. What do we have right here? We've got a daily chart. We've got a sort of a spike low. We've got another touch, a third touch, a little bit of compression, and then we broke beneath that trend line. That sort of suggests that we've got some bearish price action that's taken over the market. Maybe we want to favor the downside of the Euro USD, at least for the short term. If, in fact, you were to maybe go short beneath that trend line, you probably need to stop yourself out up above last week's high. But there really is a chance here to get a bit of rotation back down into last week's range and maybe see the USD gain a little bit of puff on the euro, especially with that CPI number coming and the FOMC minutes. So definitely something to look at there in the Euro USD. Nice simple trend line reversal on the daily time frame. Okay, let's go ahead and look at the Kiwi now. I know a lot of folks are trading the Kiwi right now. We've got really some key events set up for this week. RBNZ's going to get involved here. We're thinking maybe interest rate cut. We're not necessarily certain just yet, but that will be a huge market driver, and the FOMC minutes. Those two events will shake up the Kiwi here, the NZD USD. So I love my macro levels. Going into key events, I love macro levels because they give us a chance to trade if the market gets into a state of disequilibrium. We have a very good chance of that happening here with the NZD USD. So this is very basic. We backed off to a monthly chart. We're going to work a Fibonacci retracement sequence right from about, the 4-month low or so, right up to last month's high. And that's what we're looking at there. You got a real nice area, real nice 38% level. Let's go ahead and pull our crosshairs up, and you can see our 38% level somewhere, right around 58? Somewhere right in there, 58.80. Not too bad of an area, so we're watching that relatively closely here in the Kiwi. I think that could be a big-time trade, especially as we wind a little bit later into the week. It's been good to us before. Will it be good to us again? We got to wait. We got to respect that zone because that could be a big one. Remember, RBNZ speaks, FOMC minutes Wednesday. That's going to be really a key 24 to 36 hours for the Kiwi, and there right there is going to be your big-time level, 38% on the monthly chart. Go ahead and check that out. And once again, we'll cover these ideas during the live streams as well this week. Don't miss them. Great Britain Pound Aussie. A lot of folks trade the Pound Aussie these days, and that's absolutely fantastic. Well, on the daily time frame, we've got sort of an interesting situation. We've got a bid on that 920 crossover that's going to take us sort of long from about 207.40, 207.41, somewhere in that zone. And it really was a nice initial jump late last week. Since then, we've seen a bit of a pullback, and that maybe gives us a chance for a secondary entry if we didn't get long on that initial 920 crossover. That would be our gold bar. This is our coded package. Gives us all sorts of indicators. You can see the shaded area between the 9 and 20, sort of a trend indicator. The bigger the shade, the stronger the trend. Purple bars on a cross under, gold bars on a crossover. That would be potentially a buy signal. Well, sometimes you don't have to get in on the first signal. Sometimes you can wait maybe for a retracement before building your trade, or at least building your entry. So our conventional entry is right up there, as you can see on the gold bar's close. But this pullback zone right here, spike low, spike high, pullback right around 207, 207.59, maybe 207.65, somewhere in there. Interesting level, a deep retracement down right around 206, maybe 207 even. That's not a bad bid either. So if you were going to build a trade and really design where you think the market's going to go, if we have any smart money concept traders out there, I know you're familiar with liquidity sweeps and also sort of the top of market structure, maybe the top of this bullish market structure up there somewhere around 210, 210.50, somewhere in that zone. Your stop out point's going to be more important, probably right down there beneath this spike low. But if you wanted to extend it down here and try to make a bigger trade, maybe a position or a longer term swing trade, then you certainly could do it right here based on this 920. Lots going on for the Great Britain Pound Australian dollar. This is one that's under our microscope right now. We had the big move out of the Bank of England here not too long ago for that rate cut. And we've also had a real stagnant gold market. That's been sort of a drag on the Aussie. A lot going on here. A lot going on here right now. Slight bullish bias, but still we've got premium entries that are just waiting there for us. We just have to get the price action to come our way. All right, Canadian CPI is due out, and this CAD yen, interesting pair. A lot of folks are trading the CAD yen right now, and a lot of reasons why. You've got the global trade war really kicking off between Canada and the United States. A lot of tit-for-tat tariff talk. Say that 5 times fast. But what that does is that shakes up valuations. It also brings a bit of uncertainty to the Canadian dollar, not just against the U.S. dollar, but across the majors. So CAD yen, I'm looking at that relatively closely. I love to step back from a monthly time frame. We just did it. I'm on the Kiwi. Let's go ahead and do it again here, just with Fibonacci retracements and price action alone. And you can see the key level here in the CAD yen. We've tested it once, that 106 zone, maybe 106 and a quarter. You can see this month's low was right down around 106.24. Whew, that was a pretty strong trade to the top side. If we get a chance maybe to bid that zone again, that could be fantastic, as well as a nice support area. But also, you've got 62% level down right around 104.24. If this market absolutely falls apart, something severe, a bearish market driver for the Canadian dollar, potentially we could get a great golden zone buy on a long-term chart. And those are key macro levels. So we've got levels in play for the Great Britain Pound Aussie, the CAD yen, the Euro USD, and the Kiwi. Those are our picks to click for week 34. Remember our key events. We've got CPI coming out of the UK and the EU. We've also got the FOMC minutes dropping and the RBNZ interest rate decision. Those are the biggies. Those are the ones you need to focus on for this week. It's a great week to trade the Forex. There's a lot going on in the markets. Be sure to join us each and every day for our live streams. And also, we've got that live webinar for the Piranha strategy a little bit later this week. Be sure to click the link inside of this email and go ahead and check that out as well. All right, guys. Those are the picks for week 34. If you have any questions at all, be sure to reach out beneath this video on the thread, or head on over to howtotrade.com. Send me a private message and I will get back to you. Trade the action well, and we'll talk soon. See ya.